Morning. Going into the election 2 months away, Jim Bianco of Bianco Research seeing November's election as a risk to markets, writing the following. Recent data suggests the election will be much tighter than most expect. The markets may be caught off guard with either a Trump victory or if Republicans hold on to the Senate. Jim joins us right now. Jim, where's the market risk for you and what do you think is underappreciated?
I think a lot of people are looking at the polls when it comes to the election, and they're concluding what the polls tell us, which was 3 weeks ago. And we've had 2 conventions, and we've had some protests, especially in Wisconsin. And if you look at the betting markets, they've made a big shift that they think that the election is a dead heat right now. And I think that people are slow on the uptake to say that this has gone from Biden lean to more of a dead heat. Now, that doesn't mean it can't change again. It probably will in either direction, but it is tightening up. It is before Labor Day. There's still 60 days to go. And I think that people that were expecting a blue wave or a solid Trump loss, it could still turn out that way. But as of right now, I think it's a lot closer than we think.
Jim, that's largely because the conversation has shifted away from addressing the pandemic to securing the cities. You've got to anticipate what the big topic will be going into November. Often what happens is you and I talk like there's a single issue that dictates the whole election and then the election goes the other way. But for you, what do you think is the big issue as we count down the next 2 months?
Oh, I think that there's going to be a number of big issues, and I'm fond of saying that the election will turn on events that haven't happened yet and that we can't almost predict. Witness what happened in Wisconsin last week as well, too. But away from that, I do think that the big issue is going to be the economy and whether or not the recovery that we've had since the second quarter lows will continue. Evidence is that it's stalled right now. And what's masking that is the stock market rally. Kevin Cirilli was just talking about whether or not we're going to get a fiscal stimulus deal. And I've worried that the big holdup is the stock market makes new highs and it sends a signal to Washington. There's no hurry in putting together fiscal stimulus because everything must be okay because the stock market is making new highs, where I don't think that's the case at all. I think that what the stock market is doing is more about what central banks are doing and about liquidity. And what you see in the numbers, especially the ADP number coming in way below expectations yesterday, is more about a stalling recovery, not a reversing recovery, but a stalling recovery. So how that is perceived over the next 60 days, I think, is going to be critical in determining the outcome of the election.
Jim, the tail's wagging the dog. I'm with you on that. But just looking at markets, it just feels like many people are making it up as they go along. We came into August, closed out July. Everybody said the same thing, Jim. I'm using everybody a little loosely. Forgive me. Most people said the same thing. If we don't get a fiscal package, the market's in trouble. We had a huge August. No trouble at all. We're coming to September with the same attitude, Jim. What do you make of that? Does the fiscal package actually matter to some people out there, in markets at least, and markets specifically, in the way that many people anticipated it would?
No, everybody said it, including me. I thought the same thing, too, that if we didn't get a fiscal package in August, that it would stumble the markets. But what we've learned in the month of August is there are the inputs and the drivers of the markets, and there are the inputs and the drivers of the economy, and they may not overlap as much as we think. What we got in August, actually, was a Federal Reserve that changed their mandates to become way more accommodative and allow for a lot higher inflation rate and signal that they are going to stay as easy as they possibly can for the foreseeable future. And that might matter a lot more for markets than whether or not we get a fiscal stimulus that will help push the economy forward. That helps for Main Street, but not necessarily for Wall Street.
Yeah, Jim, I mentioned this on the show a little bit earlier with Tom Keene and Lisa Abramowitz. It was something that Lloyd Blankfein had said on a podcast in the last couple of weeks, and something you and I have actually talked about, that you could have received every single data point, every single input, every single policy response at the start of the year for the year to come, and you probably wouldn't have called this market. We're down today, but we're up big time on the NASDAQ through 2020. Jim, how can you explain the moment we're in if you couldn't anticipate it at the start of the year, even if I gave you every single data point you needed?
Not only that, but even if I gave you the data points of the virus count that peaked in late July, you would have never predicted what we've seen going right now. I mean, the simple answer is you really couldn't have. And what you needed to kind of come to the realization of is that market liquidity matters a lot more than we thought. And the Federal Reserve and the federal government, let's not President Trump has tweeted out many times that he was going to bail out just about every industry that was in trouble back in the spring and summer, that mattered a lot for investors. And one last thing I might add, and Chris Harvey mentioned this in your previous interview, there is a froth going on in the options market right now. There is rampant speculation in equity listed options, and that might be feeding through into this market. So if you're looking for that, maybe some of this has led to a froth, you might have a hard time finding it in the stock market, but look at what's going on in the options market. It is really raging like it was the bubble peak of 2000, if not greater.
Jim, you think it's that bad right now, some of the activity that you're seeing?
Yeah, I mean, you've got 75% of the trading in options is less than 2 weeks to expiration. The majority, maybe 2/3 of the options, is small traders right now. They tend to be very momentum driven and price insensitive as well, too. You've got a break with the VIX index, which is the volatility index, with other traditional measures like the move. And that, I think, is just because of the rampant speculation that you've seen in the options market. So how is all of this liquidity manifested itself? We all look at the stock market going, is it here? Is it here? I think it's in the options market, and it is showing up a lot in a lot of these high-priced tech stocks. That's another way that people play a $2,000 or $3,000 stock price, is they play it through the options market because the premium prices are lower.
Well, Jim, let me ask you this question just to wrap things up, because I asked it of Chris, but I wonder if you've got a different perspective on it. The high yield rally has just stalled out a little bit. It's not a sell-off. Spreads aren't wider. They're just not tighter through August in the way that this equity market rallied. What do you make of that, Jim?
Yeah, I'm a little worried about that as well, too. Remember, you have got a price-insensitive player in the high-yield market in the Federal Reserve, at least in the fallen angels category after March 22nd, and in the investment-grade area. And that should be really pushing the market forward, and it is stalling. Now, I'll go back to Chris, and he mentioned a lot of that is in energy, and a lot of that, about 13% of the index is energy. It's a big player in casinos and stuff, and they are struggling because they're more tied to Main Street, and they're just not getting the traffic. So maybe the high-yield market is giving us a signal, like the real economy, that things are stalling. Not reversing, but stalling. But the stock market, it's just all steam ahead because of liquidity.
It's been on fire through August and into September, that's for sure. Jim, great to catch up with you, sir. Jim Bianco there of Bianco Research. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls, and later, BMO's Brian Bowski.